Okay, this section is just a brief overview of financial statements. In general, financial statements are performed in three basic reports. We have the income statement, the balance sheet, and the cash flow statement. Now, we'll begin by looking at a brief overview of the income statement. And in the income statement, let's go down. This is for Microsoft. At the top line, we've got revenue, or how much money is initially generated. And then right below that, we have the cost of revenue. In other words, how much money was spent to generate the overall income brought in. If you subtract the cost from the revenue brought in, then we get to the gross profit. Okay, and then below that we have these general operating expenses such as research and development, sales, general and administrative expenses. Some people abbreviate that SGA. If there is any restructuring, and then other operating expenses. So they add up the total operating expenses. Here you have 45,940,000,000, and the operating income is the 115 minus the 45, and then we get the 69.
According to Wikipedia, cost of revenue is the total of all costs incurred directly in producing, marketing, and distributing the products and services of a company to customers. Cost of revenue can be found in the company income statement.
Okay, so let's move forward. And we get to this figure. The operating income is 69,916,000,000. And then we have other sources here of expenses. We've got interest expense. This section's under other expenses. So we get to a figure called income before taxes, and then we go on down to some other adjustments when we get to the figure of net income. So net income is after including, after taking the operating income and subtracting some of these financial expenses, we get to a figure of 61,271,000,000. And then this figure here, they figure out, or they use the number of shares as a denominator, and so you get a basic figure of $8.12 per share, because there are millions of shares. And finally, after adding in the weighted average shares outstanding, you get something called EBITDA, EBITDA, earnings before interest, taxes, depreciation, and amortization. And this figure in the trailing 12 months, or the past 12 months, comes to 85,134,000,000. Now, there's something I want to point out that is interesting. In business in general and academic finance, this is an important figure, earnings before taxes, depreciation, and amortization. However, in conservative value investing, Warren Buffett and Charlie Munger do not really respect EBITDA, because it kind of hides what your expenses are going to be in terms of taxes and depreciation and amortization. So it's a figure that is talked about a lot in business and in academic study or finance. But what they really want to do is get down to the nitty gritty and look at the real cash that's made for all the stakeholders, all the shareholders. So they tend to concentrate here, which is my favorite financial statement, the cash flow statement. So for the time being, we're going to skip the balance sheet. Microsoft has a very solid balance sheet, so I will leave that up to you to take a look at if you're interested. So let's go to my favorite cash flow statement. And here we'll see where the real money goes. So in the cash flow statement, you have the general heading of cash flows from operations, cash flows from investments, cash flows from financing, which would be borrowing. And when you see a parentheses around these numbers, that means these are numbers, or negative numbers, or numbers that are paid out. So they, on some of the borrowings, like here, they paid out $3,750,000,000 to pay down debt. When they repurchase their own shares, which makes each share a little bit more valuable, here they repurchased some of their own shares, so they spent $27,385,000,000. They paid out a dividend, another $16.5 billion here, and some other financing activities there. So once you take all those cash flows, whether they're flows coming in or flows going out, remember the flows going out are in parentheses or negative numbers, you get to a figure of the net cash provided, and the most important one is this one here, cash at the end of the period, which is $14,224,000,000. Now we go on down further and we summarize everything in this area here. So value investors like to look at the summary of free cash flows because it kind of gives you an idea of how much money was brought in, operating cash flow. Operating cash flow here is $76.7 billion. How much was spent on capital expenditure, which is negative, which is money going out, $20.6 billion. So this company in the last 12 months generated a free cash flow of $56,118,000,000. So it is up to this point, is a very profitable company. Then you have to ask yourself the question, knowing that it is a profitable company that has been continuously growing, are you, if you bought a share today, are you buying that share at a premium or at a fair price, or are you purchasing it at a bargain? And I will talk about that in the next video. But basically, I just wanted to give you an idea of how these forms, these statements are structured. So on the cash flow statement, which is probably the one I look at the most, I do a quick eyeball. I look at the net income line. And so net income provided by operations was 76.7, and then amount used for investment or reinvestment at 27.5. So after you take these two numbers, then the net cash provided was 48.4, and after doing these adjustments, then you get a cash at the end of the period here. My favorite is the summary of free cash flows here, because you take the figure, operating cash flow, you subtract out the amount that's used for capital expenditures or expenditures back into the company, and then the amount that can be divided by shareholders is this third figure here, because you take the top one and you take the 76.7 and subtract out the 20.6, and then you get 51.1.